And if we can see sort of the same thing as we saw in 2020, well, then we are in for a massive, massive bull run. I think Bitcoin is in a phenomenal spot to go higher, and I'm going to explain everything in this video. We can see that Bitcoin is currently reacting beautifully off of a multi-week support level on the daily time frame. What's super interesting here is that this is nearly identical to the exact same pattern we saw in 2023 before a massive rally. We have the first or initial support touch that happened here, and obviously that sent price higher. What's really interesting here is this failure swing that we saw right after the initial support touch, because if we now compare that to 2023, we can see a nearly identical pattern. Bitcoin runs down and hits a multi-week support that gives off a reaction, but then we see this slight sell-off here, just like we saw the other day on Bitcoin, right before a failure swing in a massive rally higher, again over 400% higher. We are essentially seeing the exact same thing here. Now, what I'm interested in personally is this multi-week resistance level that you're looking at here. This is basically how I view market structure, right? If we now hold a support level and continue to violate a resistance level, well, then that tells me that the bulls are probably in control. Another catalyst here that's super interesting is the 100 period moving average. The last time we saw a dip below this was actually in 2023 as well, and of course that was followed by a 408% rally. And right now Bitcoin has just dipped below that 100 period EMA for the first time since 2023. And so in my opinion, this just screams that we are going higher. Not only is market structure basically repeating itself, but so is the touch at the 100 period EMA here. So we're essentially just repeating the year 2023 as a whole, and that's why right now might be a great opportunity for you to invest in Bitcoin. I want you to pay close attention to each and every one of the Bitcoin tops that we've seen throughout the previous years. The top, or whatever you want to call it, that we're seeing right now is in no way, shape, or form comparable to any other Bitcoin top that we've previously seen. This suggests that what you're seeing now is merely an accumulation phase before the inevitable leg higher. Now again, what we could see is another retest of this green area down here before another massive leg up. Again, if history is going to repeat itself, well, then the top is going to be in somewhere at around 250,000. I also want to show you the global liquidity with a 30-day offset. As you guys can see, the global liquidity is actually expanding and it's not really reflecting on the price of Bitcoin, but there's a very obvious reason for this. So right here, we obviously got a lot of liquidity injected into the global economy, and that has not reflected on Bitcoin itself. But that's because there's a significant delay between money entering the economy and that reflecting on the Bitcoin price. Bitcoin is obviously considered a risky asset, and so whenever there's fresh liquidity within the economy, well, then it takes more confidence and risk appetite from these investors to rotate that capital into Bitcoin. And that's the exact delay that we're seeing here, and that's also why we're able to use an offset delay on the global liquidity. Something else I find very interesting is the unemployment claims that we've seen the last 3 times. On November 20th, it came out to be 220,000, yet the forecast was 227,000. That means more people are in job. Now, 6 days later, we had a forecast of 226,000, but the actual was 216,000. 2 days ago, we got another report where the forecast was 219K, but the actual was 191K. This suggests that the overall labor market is improving and less people are filing for unemployment claims. Now, this is massive for Bitcoin, not only because the investor confidence and risk appetite will inevitably increase as the labor market keeps growing, but also because the more people that are in jobs, the more capital we have within the economy, and that is inevitably going to increase confidence and increase potential liquidity that can flow into assets like Bitcoin. So seeing the unemployment claims go lower and lower with each update is actually a massive plus. I also want to talk about the Fed balance sheet. In 2020, we had one of the largest crypto bull runs of all time. That all started because of quantitative ease, okay? They started to expand their balance sheet, and that reflected onto the price of Bitcoin. When they then decide to put an end to quantitative ease and start quantitative tightening, well, then obviously their balance sheet was contracting, and that also reflected on the price of Bitcoin and started a sell-off. What's really interesting is that quantitative tightening has just ended, and that means there is is a significant higher probability that we're going to see a quantitative easing sometime in 2026. And if we can see sort of the same thing as we saw in 2020, well, then we are in for a massive bull run. Ethereum is, in my opinion, also in a great position. People just don't know how to read market structure. The first thing I want you to pay attention to is the reaction price gave after sweeping the low that was formed in October of 2023. We didn't even get a candle closure below, right? We just got a massive wick before a rally higher. Now, if we compare that low to this high that we're seeing here, we can see a significant difference. That immediately tells me that sellers are having trouble pushing price below lows and buyers are not struggling as much pushing price above highs. The problem is people think market structure is as simple as this. We have a higher high, higher low, higher high, higher low, higher high, higher low, and that's basically what they think is supposed to happen. But as you guys might be able to tell here, that is not at all what we usually see within real price action. So here we have a low that was then followed by a higher high, and now we've just put in a higher low. When you zoom out, this still means that we're within bullish sentiment, especially when you look at the lows compared to the highs. Now, here's something very interesting that I want to show you. Institutions quietly buy 473 million XRP as ETFs rocket to 1 billion AUM. Why big money is piling in? This is significant because flows move before price. And when ETFs start accumulating a quiet asset like XRP, it always means a larger move is loading beneath the surface. And again, have a look at this. XRP ETF inflows hit a 15-day streak. US spot XRP ETFs have now logged 15 straight days of net inflows, pushing total assets to nearly 900 million. Now, the chart itself on XRP, I also think is starting to look much greater. We put in a low and then we put in a higher low. What I'm really interested in here is to see whether the buyers can successfully push XRP above the $2.2 mark. If we can, well, then I would like to see that resistance level turn support, because that to me confirms that buyers are indeed in control and sellers are weaker. Zooming out here to the weekly time frame on XRP, it just looks like an explosion waiting to happen. This is typically what we see before a massive explosion higher. We have that very tight downtrending market before the massive explosion higher. So guys, based on all the data that we've looked at here and everything else within the economy, I think it's safe to say that 2026 is more likely than not going to be a magnificent year for crypto.